Testing. Right. Hi everyone. Welcome to the pre-market live analysis session brought to you by IC Markets. I trust all of you have had a great weekend, right? Spending some quality time with your family and friends. Right. Before we begin today's webinar, right, please take note of the disclaimer. Right, this is marketing communication and does not contain and should not be construed as containing investment advice and or investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading forex and CFDs, as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Right. My name is Ketan Rameshchandra. This webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, before we dive into the chart and trading view, let's take a look at what's coming up on the economic calendar for this week. Right, there's quite a few things going on this week, but I want to bring your attention towards US consumer inflation. That's out on 12th of March, that's Wednesday 12th of March, followed by the Bank of Canada's interest rate decision press conference, and we've got GDP data out of the UK on Friday 14 March as well. Right, so here's the calendar for this week. Right, on Sunday, 9th of March, we had inflation data out of China being released. Right, we had consumer inflation data and producer price index. Right, that measures the level of inflation in the wholesale sector, and we can see that inflationary figures continue to deflate. Right, on an annualized basis. Right, consumer inflation, after rising 0.5% in the previous month, declined 0.7% in February's reading, and at the same time we can see producer price index has continued to show deflationary pressures once again. Right, so this highlights weakness. Right, overall this highlights weakness in consumer demand as well as in production output in China. Right, now coming back to this week, right, Monday's a quiet day, Monday 10th of March. Right, we don't really have anything on the calendar for today, but as Tuesday rolls on, right, we've got quite a few important data points being released. Right, as I mentioned, we've also have US consumer inflation data, which drops on Wednesday 12th of March. That's at 12:30 p.m. GMT time, and about an hour and 15 minutes after, the Bank of Canada is widely expected to reduce its overnight rate by 25 basis points to bring it down to 2.75%. And then we have the press conference as well by Governor Tiff Malcolm that begins at 2:30 p.m. GMT. Thursday is also inflation day as well. We've got producer price index for the US being released, and then on Friday we have UK GDP data as well. All right, hi Jamilu, good to see you as well. Thanks for tuning in. All right, so and on Tuesday, we've also got Joel's job openings being released, which seems to suggest job vacancies are starting to pick up slightly. Right, rising to 7.7%, 7.7 million vacancies in the latest reading. Now, taking a slightly closer look at inflation for the US, headline CPI is expected to moderate slightly lower, right, from 3% in January down to 2.9% for February. Now, on a monthly basis, we can see the rate of change for both headline and core CPI appears to be slowing down. Right, we can see after rising 0.5% and 0.4% respectively, for the month of January, we can see headline and core starting to ease as well, and that could put some downward pressure on both annualized readings, headline and core. So should we see inflation come in softer for the month of February, right? That's likely to put some downward pressure on the dollar. And also Thursday as well, if PPI continues to show softer increases as well, that's likely to put further downward pressure on the US dollar. Now, sandwiched in between is the uh, interest rate decision by Bank of Canada, right? So take note, the loonie, right, or the Canadian dollar is very likely to face much higher volatility on Wednesday and Thursday as well, right? It's likely to be whipsawed by the combination of US consumer inflation data, producer price index, and of course the central bank decision by the Bank of Canada as well. Alright, so with that, now let's dive over into the charts on trading view and begin the analysis on the dollar index, of course, right? So here we are starting on the dollar index. Right, hi Karim, great to see you as well. Thanks for tuning in. Right, okay, so as usual, right, we'll start the analysis on the dollar index. Work our way through some of the major currency pairs. We'll definitely be looking at dollar CAD today, right? Because we've got the central bank meeting coming up on Wednesday. Touch on the commodities, touch on Bitcoin and Ethereum, and look at the indices as well. And of course, should you have any other analysis, requests for any other analysis, please do drop them in the chat box as well, right? All right, so let's begin with the dollar index, of course, right? We can see here since the beginning of March, right, we've seen demand for the US dollar fall off significantly, right? We've seen intense selling pressures actually being created, right? We've seen the dollar index reversing sharply from 107.60, right, dropping as low, right, dropping as low as 103.45 last week, right, losing nearly 4%, right, in a space of 1 week, pretty much 5 trading days. We've seen the dollar index lose nearly 4%. Now, this is all primarily attributed to the ongoing trade uncertainty, right? Trade policy uncertainty by the US with its with its major trading partners such as Canada, China, and Mexico, and of course the EU as well. So because of that, there's a lot of trade uncertainty that has caused huge reactions in global financial markets, and especially has caused the dollar index to drop sharply as well. All right, hi Rand. Yeah, good evening. Yep, we'll definitely cover cable and Aussie as well. So right, so let's start with dollar index, then go down to cables, take a look at dollar CAD since we've got the Bank of Canada lined up this week, and then we'll touch on Aussie as well. All right, great. Okay, so and Karim, XAU USD, yep, we'll definitely be touching on the commodities and gold as well. All right, so looking at once again the dollar index, we can see this is a huge drop for the dollar index since the beginning of March, and if you actually look at it since mid-January, right, the index has lost over 6% since then. So huge downward pressure on the dollar, with the dollar index clearly reflecting the lose of momentum, right, for this index. Now, the dollar index closed at around 103.86 last Friday, right, and the downward pressure continues to remain in place. However, we should not rule out any retracement to the upside, right? Of course, as we all know, price never moves up and down in a straight line, right? So despite falling for the whole of last week, right, we had 5 consecutive trading days where the dollar index closed in the red, right? We could probably see some retracement to the upside, right, as we could see potentially short covering take place. Remember, after intense selling such as what we experienced last week for the dollar index, there could be some relief as well, relief rally brought about by potential short covering as well. So that's why I've identified the pivot at 104.42. Now the level at 104.42 is actually an overlap resistance, right? Previously, okay, wait, let me right size the chart a little bit so we can see it in full clarity. Right, so previously this level at 104.42 functioned as resistance here, At the end of October 2024, we can see it running into resistance here, forming a nice swing high, and after which, when the bullish breakout took place on 6th of November, right, that's when the US elections results were released as well, right. American voters headed to the poll early on 6th of November, and we had the results being confirmed later on in that day. Now, after the bullish breakout took place on Wednesday, 6th of November, we saw the dollar index pull back sharply, but managed to stabilize at around 104.40 before reversing to climb significantly higher. So this then creates a very nice overlap level, right, which we can use in the identification of a potential resistance for the present moment. Right, so the pivot is an overlap resistance at 104.42, which is also accompanied by a Fibonacci retracement at 23.6%. Now, this retracement level was found starting from this swing high on the 28th of February, going down to the swing low here on the 7th of March. And we can see that the 23.6% retracement aligns very well with the overlap resistance, which is the pivot. And we can also see that the 50% retracement aligns very well with the first resistance at 105.26, which is a pullback resistance as well. It's almost like an overlap resistance, right? But it's more of a pullback resistance here, right? So with downward pressures remaining strongly in place for the dollar index, right, I think this index is likely to slide lower this week, especially if inflation data in the US continues to come in soft. So we have consumer inflation and producer price inflation being released on Wednesday and Thursday respectively, right? So if we see the prices rising at a slower rate for both of these indices, right, it's very likely the downward pressure on the dollar is likely to accelerate even further. However, I would not rule out any retracement to the upside, right? Any relief rally, it could take place as well, especially after five strong days of selling pressures on the dollar index, right? From the 3rd of March, of course, till the 7th last Friday, we saw the dollar index lose nearly 4%. So take note, any retracement to the upside could be limited at around the pivot at 104.42, which is a overlap resistance that's accompanied by Fibonacci retracement at 23.6%. Now, what about support? Now, looking at the level at 102.65, I actually see a very significant overlap level, right, that's been in place since the 10th of January 2024. Now, previously, back in November of 2023, this level functioned as a nice swing low, right, providing a nice floor for the dollar index to stage a pretty decent rebound or retracement to the upside, and then before finally giving way, we can after giving way, we can see that this level functioned as resistance on 19th of December, and then again on 9th of Jan as well. So at this point, it's already been formed into a nice overlap, and after that, in March of last year, we see a very nice base being formed here, right? We see a nice swing low being formed in mid-March, right? So this creates a very significant overlap level, and we can also see a nice double bounce here take place momentarily, right, or briefly on 5th and 13th of August, right, before finally giving way once again. So very clearly, the level at 102.65 is an overlap support, which we have identified as the first support, and accompanied by not one but two Fibonacci retracements, right? We've got a Fibonacci levels rather. We've got one Fibonacci retracement at 78.6%, and we've got a Fibonacci extension at 161%. Now, how do we find those levels? Right, let's dive into that. So the retracement was found, right, by drawing of starting from this swing low here on the 27th of September and ending the retracement on the swing high on the 13th of Jan. And you can see the 78.6% retracement sit at 102.30, and the extension at 161% was found by running another retracement, but this time from this swing low on the 6th of December and going up to the swing high on the 13th of Jan. We can see that the Fibonacci extension at 161% sits at 102.48. So this zone here, right, sits just underneath the first support, which is at 102.65. So this is very likely to be a very strong support zone for the dollar index, as we have not only do we have the overlap support, but we have not one but two different Fibonacci levels, highlighting a potential Fibonacci confluence here. So this zone that's between 102.30 and about 102.65 is likely to form a strong floor for the dollar index, perhaps at some point this week, maybe by the end of the week, or maybe even as late as early next week, right? So take note, overhead pressures for the dollar index have increased significantly in recent weeks, right? And especially last week, with the dollar index losing nearly 4%, dropping all the way towards 103.50. However, when after such a sharp fall off, a sharp decline, right, we could see some relief take place, a relief rally take place as short covering begins, and we could see a retracement to the upside towards the pivot, which is an overlap resistance that's accompanied by Fibonacci retracement at 23.6%. So should we see the dollar index retrace higher towards the pivot and perhaps stall around this level once more, it can help us identify much better short entry, right, to ride the downward momentum. Now, with that, after covering dollar index, let's move on over to cable. Right, hi Devil. Right, great. Yes, we'll cover Bitcoin and Ethereum as well. Let's continue with dollar index, some of the major currency pairs, gold, and then we'll move on over to Bitcoin and Ethereum before touching on the indices. So looking at Bitcoin, cable, right? The British pound US dollar is also known as a cable, and we can see that since this swing low that occurred in mid-January, right, the cable has rebounded very strongly, gaining 7% over the last 2 months, over the last 8 weeks, right? We can see very strong rebound, very strong reversal taking place, right? As prices were falling sharply from September till mid-Jan, we saw the cable stabilize at around 1.21 and stage a very strong rebound since then. Right, so we can see that since mid-January, right, this currency pair has been in a strong uptrend, smashing through several key resistances as well, especially this level here at 1.2770. This level previously functioned as a strong swing high resistance, right, back in 6th of December, right, as the cable was making a retracement to the upside. It ran into resistance at around 1.28 before reversing to drop significantly lower. Now we can see that it has smashed through this level very easily on Tuesday, 4th of March. Then we saw it pull back slightly on the 5th and then continue the up rebound once again. Now it also smashed through another pullback resistance, right? This level at 1.2870 previously functioned as a pullback resistance, and we can see that it has smashed through that level quite successfully as well, and we can see the upward momentum continuing this week, right? So the pivot for cable has been identified at 1.2870. This is now an overlap support, right? We can see here after pulling back on Thursday, 6th of March, and stabilizing and bouncing on Friday, this creates a very nice overlap level, right, which we can identify as the pivot here. So the pivot is at 1.2921, right? Pivot is at 1.2873, which is an overlap support. So if you're expecting dollar index to pull back slightly this week, right, this pivot is going to function as a support area for cable, and we can probably see it bounce off this level to resume the uptrend towards the first resistance. First resistance sits at 1.3044. This is another significant overlap, right? Because we can see a swing high taking place, swing high resistance being formed here in mid-July 2024. We see a very nice swing low being formed on the 12th of September, and we see consolidation around this level as well from 15th of October till the 7th of November last year. So this creates a very significant overlap that we've identified as the first resistance, and that level sits at 1.3044. Now this overlap resistance is also accompanied by Fibonacci Fibonacci extension at 127%. Now we found this extension by running a retracement from this swing high on the 6th of December, going down to the swing low on the 13th of Jan here. We can see that the Fibonacci extension right at 127%, right, sits pretty close to the overlap resistance there. So pretty strong resistance barrier for cable. So should we see the upward momentum continue, right, identifying a take profit target close to the first resistance for any long trade that you may have on this currency pair would be a suitable area to do so. Now beyond the pivot, there's another pullback level at 1.2770. Right, remember previously the swing high resistance being formed here in mid-December, and after price breaking above it, this swing high resistance could potentially function as a pullback level or pullback support, and that's how the first support at 1.2770 has been identified. And this pullback is also accompanied by Fibonacci retracement at 23.6%. So once again, we started the retracement from this swing low on the 13th of Jan and ending with the high of last Friday. We can see that the 23.6% retracement, right, which is here, right, aligned just underneath the pullback level at 1.2770. Now take note, should we see cable make a new high this week, right? Remember last Friday's high sits at 1.2944. If we see this currency pair break higher this week or maybe today, this retracement that I've drawn here on this uptrend is no longer going to be valid. So remember to delete that from your analysis, right? As long as a new high is not made, right? This retracement on this uptrend is still valid. But take note, right, should we see prices climb higher, do remember to clear this retracement from the analysis. Alright, so these are the key levels for the cable as well. Very strong upward momentum. So any pullback towards the pivot, which is an overlap support, could identify a nice opportunity to go long on this currency pair once again. Alright, now let's move on over to dollar CAD, and then we'll touch on the Aussie. Right, we can see this currency pair experiencing wild swings, right, swinging wildly between 1.4800 all the way down towards 1.4150 and retracing higher last week as well, or 2 weeks ago, running into resistance at around 1.4540. So we can see the combination, or we can see the effects of global trade uncertainties, right, especially between tariffs being implemented between the US and Canada, right, injecting a lot of volatility for this currency pair, right, after falling sharply for most of last week, right, from Tuesday till Thursday, the dollar CAD fell quite strongly, right, from peak to trough. Right, from peak to trough, we can see just last week alone, this currency pair has fallen over 2%, right, losing 300 pips in the process. But on Friday, right, it rebounded quite strongly as well. Friday, it rebounded nearly 0.7%, right, or gaining 100 over pips. Right, so huge fluctuations for the dollar CAD, and this volatility is likely to continue, right, as the ongoing trade tariffs and retaliations take place between the US and Canada. Now, in terms of resistance, right, it's quite clear. Last week's swing high resistance on Monday and Tuesday, right, is where the first resistance would be identified, and that level sits at 1.4477. I think you can even probably run a Fibonacci retracement starting from this swing high here, right, 3rd of February, going down to the swing low on the 14th. Let's take a look at all the fibs. There could be a retracement level that aligns with the first resistance, and there we go, right, we've got the 50% Fibonacci retracement aligning very well with the swing high resistance at 1.4477. Now slightly below, of course, we can see dollar CAD managing to stabilize just around 1.4150 in mid-February, right, forming a nice base here. So this creates a very nice overlap support, very nice swing low support for the dollar CAD, which has been identified as the pivot. Right, with dollar CAD falling very sharply for most of last week, right, we're expecting it to continue to slide lower, and where it could stabilize is at the swing low that had taken place on mid-February, and that level sits at 1.4151. Now we can also see that this swing low is accompanied by Fibonacci projection at 61.8%. Now we found this projection starting from point 1 here, 3rd of February, going down to point 2 on the 14th and ending point 2 and ending at point 3, which is 3rd of March. So we can see the 61.8% projection aligning very well with the pivot, and we can also see the 100% projection sitting just underneath the overlap support at 1.3946. Right, so the first support at 1.3946 is a very significant overlap. Right, we can see a swing high being formed here in the first week of August, and then we see resistance once more in the end of October and early November, and then we see a nice base being formed here on 22nd of November, right? So this creates a very significant overlap level that we've used in the identification of the first support, and it's accompanied by not one but two Fibonacci levels. We've got a Fibonacci projection at 100%, which we had just identified, and we also have a Fibonacci extension at 161%. So this extension level was found, right, starting from this swing low on the 14th of February, running the retracement up towards the swing high on 4th of March, and that's how we found the extension at 161%. So once again, we have identified a strong Fibonacci confluence close to the first support, highlighting the strength of this area here. Right, so take note, first support is a very strong overlap that's accompanied by not one but two Fibonacci levels, basically the 100% projection and the extension at 161%. So for dollar CAD, we could continue to see this currency pair slide lower, and if it does reach the pivot at 1.4151, this is where I think it could stabilize and maybe stage another rebound. Alright, now coming over to Aussie. That we can see that the Aussie had rebounded strongly from last Monday, right? From most of last week, it rebounded very strongly before running into resistance last Thursday at around 63.70, and had dropped quite sharply on Friday as well, dipping under the 63-cent level. Now we can see here, right, the Aussie running into resistance last Thursday at around the 78.6% Fibonacci retracement. So we found this retracement starting from this swing high on 21st of February, going down to the swing low here on the 4th of March. We can see that the 78.6% Fibonacci retracement sits at 68.60, pretty close to exactly where the Aussie stalled last Thursday to make a bearish reversal, and we could see this currency pair drop slightly lower. Remember, for the dollar index, after dropping sharply for the whole of last week, we could see it retrace slightly higher, right, and the retracement to the upside towards the pivot is likely to run into resistance. But at the same time, that would also cause the Aussie to pull back a little bit more deeper. So should we see the Aussie pull back, right, we can already see it has made a nice bearish reversal last Thursday, and the downward momentum continued on Friday. So we could see this currency pair continue to slide lower towards the first support at 62 cents. This is a swing low, right? This is a swing. Hang on. This was a swing low that was formed on 4th of March, right? Strong support zone here, and I think we can also run a Fibonacci retracement on this uptrend. Let's give it a shot. Right, we're going to start the retracement from this swing low on the 3rd of February, going up to swing high on the 21st. Looking at all the fibs, right, we can see that 61.8% retracement sits pretty close to the swing low, but of course we can see this candle here on Friday, 28th of February, closing underneath the 61.8% retracement, right? So that's fine, right? Remember, once price breaks through a retracement level, right, those retracement levels are no longer valid. So basically 23, 38, 50 and even 61.8% are no longer valid. What's currently valid on this uptrend is the 78.6% Fibonacci retracement. However, that level sits pretty far from where the first support has been identified. So let's not overcomplicate the analysis and keep this retracement, or let's remove this retracement from the charts, right? Okay, and resistance, right, we see a nice swing high being formed here, right? A nice swing high resistance being formed here on 21st of February, and that level sits at 64 cents. So that's how the first resistance has been identified. All right, okay, so with that, now let's move on over to gold. Okay, let's quickly move on over to Bitcoin and Ethereum, then come back to the commodities, touching with gold and crude oil, and then we'll move on over to the indices. All right, so Bitcoin, right? Bitcoin has faced extreme volatility in recent weeks, right? Last week, over the previous weekend, right, which was 1st and 2nd of March, right, over the previous weekend, we saw US President Donald Trump announce the formation of a crypto reserve by signing off on a executive order, right, that would use Bitcoin along with other currencies, crypto coins, in the formation of US strategic crypto reserve. So it's going to consist of Bitcoin, a little bit of Ethereum as well, Ripple, right? XRP, Ripple, Cardano, and Solana as well. So that created very strong demand for Bitcoin over the previous weekend. But since then, right, it continues to fluctuate widely, and we can see that this coin continues to trade underneath. What I see is a very significant descending trend line, right? There's a very clear descending trend line that has been in place since 30th of January. So even after rebounding very strongly last Sunday, 2nd of March, it ran into resistance pretty much at the intersection of the descending trend line and 94,689, which is a pullback resistance, right? So after previously this level was functioning as a pullback resistance, but after making this swing high here on 2nd of March, this level is now classified as an overlap resistance, and that sits at $94,689 where the first resistance has been labeled. And we can see that it's also accompanied by Fibonacci retracement at 50%. Now this retracement level was found starting from, of course, the intraday all-time high, right? The intraday all-time high for Bitcoin was formed on 20th of January, and we ended the retracement here at the swing low on 28th of February. So we can see the 50% retracement sitting pretty close to the overlap resistance at 94,689. Now Bitcoin has fallen towards the pivot, right? The pivot at $82,087, right, is a swing low support, right? A very clear swing low, right? We can almost see like a double bottom being formed here, and it's testing this level once more. So this is going to be very key, right? Because if this level fails to hold, right, if this level fails to hold at 82,000, right, there's no real support for Bitcoin all the way down until 73,176, right? So we can see here this pivot is a multi-swing low support, but it's not the strongest level. And we can also see the 50% retracement sits slightly below it here. So take note, this is a very key point, because if Bitcoin is unable to stabilize at around the pivot, right, at around, which is around $82,000, right, then be mindful that we could see this coin drop all the way down towards $73,200, because the next major support is this pullback level that's accompanied by Fibonacci retracement at 61.8%. Now we found this retracement starting from this swing low on 5th of August, going up to the intraday all-time high on Monday 20th of Jan. We can see the 50% retracement sit pretty close to the bottom of this wick here that had taken place on Friday 28th of February, and we can also see the 61.8% retracement sit just underneath the first support at 73,176, which is the pullback level here. So in between 82,000 and 74,000, right, you can see there's pretty much nothing there. It's a huge vacuum, so to speak. There's a huge gap here. So if the pivot fails to hold for Bitcoin, I think we're going to see it slide all the way down towards 76,000 and maybe even beyond. So take note, this is where Bitcoin is trading at a very critical level, right? The pivot here has been identified as a swing low support at 82,000, and if this level fails to hold or keep prices supported, right, I think we're going to see it slide all the way down towards the first support, right? So that's the key levels for Bitcoin. Let's move on over to Ethereum. Ethereum as well, where we can see it clearly making a series of lower highs, lower lows, right? After running the resistance here at around $4,000, right, it made a double top, right? We can see a nice double top being formed here. First top in the first week of December 2024, and the second top in mid-December. And since then, Ethereum has fallen sharply, right? Ethereum has fallen well over 50% since mid-December, right, dropping to as low as or dipping under the $2,000 level as well, right, last Wednesday, and it looks to be breaking through the pivot, right? The pivot at $2,044 has been identified as a multi-swing low support, right? We can see the first rebound take place here on 5th of August 2024, second one take place here on 3rd of February, and we can see a couple of bounces as well at the end of Feb, early March, and this level seems to be failing once more. So we're seeing intense selling pressures for the crypto space once again, with both Bitcoin and Ethereum's looking to break through their respective pivots. I think this downward pressure is pretty strong, right? I think this level is not likely to hold. So what we're looking at is probably a potential bearish breakout for Bitcoin and Ethereum through their respective pivot levels, right? Over the weekend, right, on Saturday and Sunday, prices seem to have stabilized, or rather were holding up around 86,000. But today, right, we can see it dropping sharply, right? So I think the pivot is likely to fail for both Bitcoin and Ethereum. We're likely to see a bearish breakout materialize for Bitcoin through the pivot at 82,000, and for Ethereum as well. It's already looking to break through right here. So I think what we're looking at is a potential bearish breakout for both Bitcoin and Ethereum. Right, I think the respective pivots are going to fail to hold prices, and we could see this both coins drop lower as well. We can see, of course, right, Ethereum trading and continue to trade underneath the red Ichimoku cloud, and of course continuing to trade underneath this descending trend line as well, right? Very clear descending trend line. Now, before looking at the first support, let's quickly touch on the first resistance for Ethereum. That level sits at 2,524. It's a swing high resistance that was formed on 2nd of March and is also accompanied by a Fibonacci retracement at 38.2%. But take note, right? I think price is going to make a new low. So if it makes a new low beyond $1,991, right, then these retracements are no longer going to be valid. So remember to remove them from the analysis. Let's see what's the actual lowest point now. This was 1991.04. This is 1995. Okay, so for now we're very close, right? Today's low, right, the low of today's candle sits at $1,995.61. The low on Tuesday, 4th of March, sits at $1,991.04. So for now, this is still the current low. Price has not made a new low just yet. So that means these retracements that we found are still valid. So the 23 and 38.2% Fibonacci retracements are still valid for now. But I think Ethereum is going to drop lower. So once that happens, do remember to remove these two retracements from the analysis as price makes a new low. Now, beyond the pivot, right, you can see there's a huge gap between $2,000 and $1,500, right, because there's nothing really in between, right? There's no major support that we can identify in between $2,000 and $1,500. What I do see is a nice base being formed here in September of 2023. So for a period of nearly 4 weeks, right, or maybe almost 6 to 8 weeks, from mid-August till mid-October, right, for a period of about 8 weeks, we see a nice base being formed for Ethereum at around 1,500 before it rebounded very strongly. So remember, take note, between the pivot at $2,000 and the first support at 1,500, there's nothing in between that we can identify as a clear support area. So first support for Ethereum is at 1,551. So take note, any bearish break through the pivot, right, we're likely to see this coin drop significantly lower. Now, maybe there's a Fibonacci extension that we can use. Let me try something out. Right, let's try to run a retracement from this swing low on 6th of September 2024, going up to this swing high here on 16th of December. Looking at the Fibonacci extension at 127%, right, you can see that this Fibonacci extension sits at around 1,630. Perhaps the combination of the extension and the first support is where we're likely to see Ethereum probably stabilize should this bearish breakout materialize. So take note, there's a potential bearish breakout for Ethereum and Bitcoin through their respective pivots. And for Ethereum, the strong support zone is being identified between the Fibonacci extension at 127% and the first support at 1,511. Right, so here are key levels for Bitcoin and Ethereum. Remember, Bitcoin as well is testing its pivot, and it looks like this level could fail today. All right, so let's move on over to gold, right? Kareem had a request for gold as well. So XAU is the ticker symbol for spot gold, and we can see that. Let's zoom in a little bit. We can see this precious metal has made its latest intraday all-time high at $2,956.29 per ounce, and this was formed on Monday, 24th of February, right? So this was the latest intraday all-time high. And after falling, after making that high, right, gold prices actually reversed quite sharply, falling nearly 4.2% in the space of 1 week, right, pretty much 1 week, and then made stabilized last Monday at around $2,870 per ounce to stage a very nice rebound as well. And as you can see, gold prices have jumped as much as 3.4% since then, and of course the upward momentum for this precious metal is likely to continue, right? We've seen intense demand for the for gold, and if you zoom out and look at the chart since October 2023, we see a very strong bullish uptrend, right? Clearly prices moving from bottom left to top right, a very strong uptrend here, accompanied by sharp pullbacks along the way, right? So after a very strong recent rebound, pullback or correction, almost that a pullback that had taken place at the end of February, early March, right? We're seeing prices resume the upward momentum, and so pivot has been identified at $2,860 per ounce. This is a swing low support that was formed last Friday, right? Prices found a nice base last Friday and to rebound strongly on Monday. Now this swing low is also accompanied by a Fibonacci retracement at 23.6%. We found this retracement level by starting from this swing low here on 14th of November, ending with the intraday all-time high on 24th of Feb. We can see the retracement at 23.6% aligning very well with the pivot, and of course we can also see the 38.2% retracement aligning very well with the first support at $2,790, which is a pullback level. Of course, now in terms of resistance, right, there's a barrier here as well, right, close to the intraday all-time high. But of course, I think with the upward momentum so strong for gold, I would like to identify the first resistance for this precious metal at a Fibonacci extension at 137%. We found this extension level by running a retracement from this swing high on 24th of February, going down to the swing low on the 28th. We can see that the extension sits at $2,989.91. Now, so as gold prices look to remain supported and continuing to climb higher, right, I would identify several take profit targets along the way, right? You can see here close to the intraday all-time high at $2,956. This is where we can identify the first take profit target for gold. And of course, should this precious metal continue to climb even higher, I would then target the Fibonacci extension at 127%, which is at around $2,990 per ounce, as the next potential take profit target for any long trades for that you may have for gold, right? So after making a nice rebound of the pivot, the upward momentum looks to remain in place, right? Looks to remain intact, and we could see prices continue to grind higher this week as well. All right, so that's gold. Let's cover oil as well, right? Let's see if there's anything else to cover for gold before we move on. No, I think that's fine. Okay, XTI USD is the instrument that tracks the WTI crude oil futures, and we can see oil prices in a severe downtrend, right? It has dropped nearly 20% since mid-January, right? This is almost entering bear market territory, right? Off this recent high here, right? Actually, it's been in a bear market for quite some time, right? If you zoom out, right, its most recent high, over you can see here prices have actually continued to fall significantly higher. Yeah, we can see here, right, the for XTI USD, right, is the instrument that tracks the WTI crude oil futures. We can see that it's climbed above $130 per barrel back in March of 2022. I believe this was the highest point. Yep, this was the highest point, and it's been in the bear market since then. So from this peak on March 2022 all the way to where crude oil is currently trading, right? We can see that this commodity has lost over 50%, right? It's been trading in a bear market since 2022. So coming to 3 years, right? Coming to 3 years, oil prices have been under pressure. But of course, right, we can see that volatility has been pretty strong, especially for most parts of 2023 and 2024. And we see huge swings taking place, large fluctuations taking place for this benchmark, right, for XTI USD. Now we can see here as of 16 Jan, right, WTI oil has lost nearly 20%, right, with crude prices dipping under $66 per barrel. We can also see it continues to trade in a clear downtrend, making a series of lower lows and lower highs, and that also enables us to draw, I believe, a very nice bearish channel as well, right? Yep, that enables us to draw a very nice bearish channel on this downward movement here. Now, crude prices rebounded quite sharply on Friday, 7th of March. However, I think any retracement to the upside is likely to be limited, right? We have the combination of the upper trend line of the downward channel and the pivot at $68.85 to function as a pretty strong resistance barrier, and it's also accompanied by Fibonacci retracement at 23.6%. Now the pivot, right? The pivot previously was a swing low that was formed at the and over Christmas last year, and then we see it functioning as support once again at the end of February. So this level used to function as a pretty strong multi-swing low support, and then after giving way last week, this level is now likely to function as a pullback resistance. So we have the combination of the pivot, a pullback resistance, the 23.6% Fibonacci retracement, and the upper trend line of the downward channel highlighting a strong resistance barrier. So any retracement to the upside for crude oil is likely to fail as well, right? So should we see crude oil rebounding quite strongly towards the pivot, which is around $69 per barrel, is likely to fail around this level once again. Now the retracement at 33.6% was found, starting from this swing high on the 15th of Jan, going down to the swing low here on the 5th of March. And we can also see the 50% retracement sits slightly above a swing high resistance at $72.56, right? See a nice swing high resistance being formed here, intersection of the downward channel, the swing high resistance, and 50% retracement identifies another strong resistance barrier here. Now in terms of support, right, we can see crude oil bouncing off the $65.60 level, right? This was a very significant swing low that was formed on 10th of September 2024, a very swing low, very strong swing taking place here, and it's pretty much exactly where crude prices once again stabilized last Wednesday, right? So I think this retracement to the upside could have more room to run, right? A nice relief rally as well, right? After weeks of significant overhead pressures, right? Any strong relief rallies could take place as well, right? We saw one over here, right, take place in mid-February, right, for a period of 4 trading days, very strong retracement to the upside. Even here as well, in early February, 3 strong days of relief rally as well. So perhaps we're going to see something like that materialize over the next couple of days as well, right? Remember, with any price never moves up or down in a straight line, so any strong downward moves are likely to see counter trend rallies as well. In this case here, they're likely to be functioning as relief rallies or maybe short covering rallies that we saw recently in February, twice, not once but twice in February, and perhaps that's something that we could see here in the second week of March as well. A nice relief rally or counter trend rally play out over the next few days. Right, but any rally is likely to meet with resistance, especially around this level here or this intersection, right, which is around $69, right? We have once again the pivot, which is the pullback resistance. We have the upper trend line of the downward channel, and we have a Fibonacci retracement at 23.6%. All right, before we move on, right? Before we move on to the indices, I'm just going to launch a poll as well. Really appreciate it if you guys can give your feedback with regards to today's webinar, and then we'll continue the analysis on the DAX and the US 500. Alright, I've seen many of you smash the like button as well, so truly appreciate it. Thanks for smashing the like button as well as taking part in the quiz and the feedback as well, right? Do take time to respond to the poll as well, and then we'll continue with the DAX, right? The 40 is the instrument that tracks the DAX futures, and then we'll wrap things up by looking at US 500. Alright, great to see all the responses come in as well. Thank you so much. I truly appreciate it. Now, looking at the DAX, right? So DE40 is an instrument that tracks the DAX futures, and we can see that this index has made its latest intraday all-time high last Friday, right? And that level's at around 23,474, right? With increased defense spending, right? With now the US pressuring its European allies to increase defense spending, and with Germany looking to take the lead on that, right? We've seen this index being supported, right? There's a lot of industrial companies and defense related companies that are likely to benefit from such higher spending by the government, right? Specifically with regards to the industrial and defense sector. So that's why we've seen the DAX make a new high as well. So it made its latest intraday all-time high on Thursday, 6th of March at around 23,474. Right. So we can see that this index has been in a strong uptrend since August 2024, right? Of course, there have been some pullbacks along the way, some consolidation, but it's been a very strong uptrend pretty much. And after pulling back in the third week of February, we see the DAX stabilize around 22,200 and make a strong rebound once again, right? So I would say there's a lot of tailwinds. There's a lot of tailwinds for this index. So I've identified the pivot at 24,159. This is a level that's identified by Fibonacci projection at 61.8%. We found this projection starting from 0.1, 20th of December, going up to 0.2 on the 19th of February and ending at 0.3 on the 21st. We can see the projection at 61.8% sits at 24,159. That's where the pivot has been identified. And the projection at 78.6% sits at 24,707, which is where the first resistance has been set, right? So I'm expecting DAX to continue to climb higher, right? And especially if it can break above the latest intraday high, it's likely to make a good run, so a strong run towards the pivot, which is the Fibonacci projection at 61.8%. You can see here, right, after dropping as low as 22,840 last Friday, prices have climbed strongly to close at around 23,204. So I think there's still strong upward momentum, and that's going to likely to push the DAX beyond its intraday all-time high and make a good run towards the 61.8% projection, right? And first resistance is at 78.6%, the projection is 78.6%, and first support is this swing low, right? First support is this swing low here that was formed in the third week of February. That level sits at 22,177, and it's also accompanied by Fibonacci projection at 23.6%. We found this projection starting from here, swing low on 5th of August, going up to the intraday all-time high on the 6th of March. And take note, if we see the DAX make a new high, right, beyond 23,474, take note this retracement at 23% is no longer going to be valid. So do remember to remove it from the charts if we do see the DAX continuing to climb significantly higher. Alright, hi Alex. Right, well, if you're looking for like the high probability trade, right? Okay, so let me cover US 500 and then we'll cover that, right? Okay, basically, okay, if you're looking at Bitcoin and Ethereum, right, they really look to they really seeing a lot of overhead pressures, especially for Ethereum, right? So for Ethereum, it looks like we've got a very strong bearish breakout, right? We've got a very strong bearish breakout currently in progress. The downward momentum for Ethereum has been strong since mid-December. We can see that this coin continues to trade underneath the red Ichimoku cloud, highlighting the ongoing bearish momentum, trading underneath a very significant descending trend line as well. So there's a lot of overhead pressures for Ethereum. So the buyers for this coin is likely is towards the downside, right? Expecting a bearish break, right, beyond the pivot, and we could see this coin slide lower. Dollar index as well. Dollar index has seen intense selling pressure since last Monday. However, we're expecting it to retrace to the upside. So any retracement towards the pivot, which is an overlap resistance at 104.40, right, is likely to keep prices restricted, and that would mean we probably can identify another decent short opportunity for the dollar index close to the pivot, right? So should we see dollar index retrace higher and stall at around the pivot between 104.40 and 104.50, this is where I think we can identify a nice short opportunity for dollar index once again. And gold, right, gold has been supported as well. So should we see gold prices pull back towards the pivot at around $2,860 per ounce and stabilize around this region once more, right, this is where we can identify a nice opportunity to go long on gold as well, right? This is a nice swing low that had taken place last week or 2 Fridays ago, and any pullback towards this level, right, could identify a nice opportunity to go long on spot gold once again. All right, so now let's wrap things up by looking at US 500. So we can see here US 500 after making its latest intraday all-time high on 19th of February at around 6,147. This index has dropped quite sharply, right? It has dropped as much as 8% from peak to trough, right? Since mid-February, so a period of 3.5 weeks, right? About two to 3 weeks. US 500, right? This is the instrument that tracks the S&P 500 futures. It has dropped it has dropped almost 8% from peak to trough, but prices look to have stabilized last Friday, with US 500 closing in the green, right? It closed at around 5,760 last Friday, right? And we could see a nice relief rally for this index as well, right? After falling sharply since mid-February, right, we could see a relief rally take place as well after it looks like it has bounced off the pivot last Friday, right? The pivot at 5,669 is a strong overlap support, right? We can see a swing high resistance being formed here in mid-July of last year, resistance as well at the end of August, early September, and we see a couple of swing lows being formed as well, nice troughs being formed here in the first week of October and in the first week of November, creating a very strong overlap level, right? The pivot is an overlap support at 5,669, which is where US 500 looks to have bounced off very nicely last Friday, right? Last Friday, 7th of March, we can see US 500 initially dropping very strongly, but bouncing off the overlap support, which is the pivot, and this level is also accompanied by Fibonacci retracement at 61.8%. We found this retracement starting from this swing low on 6th of September, going up to the intraday all-time high on the 19th of February. Now beyond that, beyond the pivot, which is the overlap support, there's nothing to identify apart from this swing low here that had taken place on 9th of September. So that's why the first support has been set. That's at 5,386. And in terms of resistance, I see a very significant overlap. Right, I see a very significant overlap that has been in place since 19th of November. Previously, this level functioned as resistance in October through early November. Then it formed a nice swing low here in 19th of November, creating a very strong overlap level where price has respected most of the time. And we can see a nice double bottom being formed here. Of course, we see this swing low breaking slightly underneath it. And then we see some consolidation taking place here around this level at the end of February and early March as well. So very clearly, a very significant overlap at 5,872, which has been identified as the first resistance. And this level is also accompanied by Fibonacci retracement at 38.2%. We found this retracement level by running starting from this swing high, of course, 19th of February, going down to the swing low of last Friday. This is where the 38.2% retracement sits, highlighting a strong resistance barrier for US 500. And take note that this index also continues to remain under this pretty decent descending trend line, right? We have the intersection of this descending trend line, the overlap resistance at 5,872, and the 38.2% Fibonacci retracement identifying a strong resistance barrier. However, should we see a clean break through this barrier, right, then we're likely to see the bulls return, and we could see US 500 make a strong run towards 6,000 and maybe make another attempt towards the previous intraday all-time high. Alright, so that's all I've got for you guys today, right? Thanks everyone for tuning in to today's session brought to you by IC Markets. Do look out for all upcoming webinars for this week as well. Got a combination of live analysis and educational topics in English, Thai, and Bahasa. Right, and of course, take note of the calendar for this week, right? We have Joel's job openings data being released on Tuesday, 11th of March. It's also inflation week in the US. We have consumer inflation, CPI being released on Wednesday, 12th of March at 12:30 p.m. GMT time, and producer price index on Thursday, 13th of March. If inflationary pressures continue to dissipate lower, that's going to add further downward pressure on the dollar. We could see the dollar index slide lower in the second half of the week and sandwich in between. We also have the Bank of Canada releasing its monetary policy statement, followed by the press conference by Governor Tiff Malcolm. This central bank is widely expected to make a 25 basis point reduction in its overnight rate to bring it down to 2.75%. So combined with or coupled with the ongoing trade retaliations between Canada and USA, right, the Ludi or the Canadian dollar is likely to face high volatility once again, and expect huge swings for that currency pair as well. And finally on Friday, 14th of March, we have GDP data out of the UK as well. Alright, that's all I've got for all you guys today, and once again, thanks for tuning in, and do look out for all upcoming webinars brought to you by IC Markets for the rest of this week. Alright, thanks everyone, take care, and I wish you all the best.